Welcome to this Masterclass Explainer. I am your master coach, an examiner who spent years seeing exactly where students leave marks on the table. Today, we are tearing down and rebuilding the absolute bedrock of your Cambridge AS and A-Level Accounting 9706 syllabus. We're talking about the four core accounting concepts: business entity, historic cost, money measurement, and going concern. Now, I know what you might be thinking right off the bat. Come on, I know these. They're just basic textbook definitions. But honestly, that exact mindset is where thousands, literally thousands of candidates lose absolutely crucial marks in Paper 2. We aren't just going to recite definitions today. We are going to look at this strictly through the examiner's lens. We're going to dissect complex questions, master how to allocate your time, and see exactly what separates a mediocre, middle-of-the-road paper from a top-tier, flawless response. Sound good? Okay, let's dive right in.
I want you to look really closely at this number, 15%. Did you know that these four concepts alone, business entity, historic cost, money measurement, and going concern, account for roughly 15% of the total marks in Paper 2? Seriously, that is a massive chunk of your final grade sitting right here on the table. If your understanding of these principles is even a little bit shaky, you're essentially hemorrhaging marks before you even get to the complex mathematical calculations. Think of it like trying to build a house on sand. So we are absolutely not just going to memorize these terms today, we are going to completely master how to deploy them strategically.
So here is our game plan for today's session. First, we'll look through the examiner's lens. Second, we'll deconstruct the core principles. Third, we'll cover the method mark strategy. Fourth, we'll run a quick peer workshop. And finally, we'll expose the top examiner traps.
Let's start with Section 1, the examiner's lens. This is all about analytical depth.
Okay, so here's the secret. Top-performing students don't just regurgitate facts. They exhibit a deeply connected conceptual understanding that they can easily transfer to totally unfamiliar exam contexts. You really have to understand that the theoretical architecture of accounting rests on a few things: precise definitions, identifying causal relationships, and integrating these concepts with other areas of the syllabus. This right here brilliantly illustrates the difference between getting a C and bagging that A star. It's superficial breadth versus analytical depth. You see, the academic benchmarks for this exam require rigorous, logical, structured reasoning. The assessment framework heavily prioritizes analytical depth over just knowing a lot of surface-level trivia. Let's talk about command words for a second. Deeply contrasting these is absolutely crucial. When an examiner uses a command word like explain, they want the how and the why grounded in core principles. But when they throw high-tariff command words at you, like evaluate or to what extent for a massive 9 to 15-mark question, a purely factual approach is going to fall entirely flat. Evaluate doesn't mean just telling me what something is. It means you must weigh the evidence, actively question the underlying assumptions, and provide a heavily justified conclusion. You literally must deploy systematic analysis and evidence-based reasoning to unlock those top-tier assessment objective bands. Moving on to Section 2, Core Principles. Let's master the fundamental ideas.
To really deconstruct the business entity concept, I want you to imagine we are right now in a collaborative digital study suite with two of my top scholars. We've got Alex, who is highly technical, excels at formulas and facts, but kind of struggles with open-ended evaluation. And we have Sam, a highly creative thinker, super strong at building arguments, but sometimes struggles with structural precision and timing. So they are debating this definition, that the business and its owners are treated as separate and distinct entities for accounting purposes. Now, Alex immediately jumps in and points out the technical fact. Alex says, well, this means if the owner takes cash out for personal use, it's recorded as drawings, not a business expense. And yes, exactly, Alex. Hit the nail on the head. But then Sam steps in and pushes for that broader conceptual perspective, arguing, yeah, sure, but to get the evaluation marks, we actually have to explain why. It's to ensure the financial statements reflect only the performance of the business itself, preventing any distortion of the true profit figure. And you know what? Sam is right on the money here. As the principal examiner reports highlight time and time again, candidates who reference these exact cross-topic connections, linking the business entity concept directly to the accuracy of the final profit calculation, are the ones who achieve significantly higher marks.
Next up is historic cost. The strict definition here is that assets are recorded in the accounting system at their original purchase price. Now, Alex absolutely loves this one. Why? Because it's objective, it's factual, it's based on a solid, verifiable receipt. No guesswork involved. But Sam, who's constantly hunting for those high-tier analytical depth marks, raises a critical problem. Sam says, wait a minute, what if we bought a building 20 years ago? The historic cost is going to be entirely irrelevant to its actual market value today. This debate right here, this exact friction is precisely what examiners want to see on your paper. Sam is pushing hard for the conceptual limitations, while Alex grounds the argument in the absolute need for objective, reliable facts rather than subjective estimates that could be manipulated. Understanding and explaining this tension is exactly what builds the theoretical architecture of a flawless, full-mark evaluative response.
Let's see how this exact same tension builds when we look at the money measurement concept. This dictates that only transactions that can be expressed in monetary terms are recorded. So Alex confidently writes down on the board, "We record the purchase of inventory, but we absolutely do not record the retirement of our most experienced manager." Sam immediately jumps in, challenging this. "But wait, losing that senior manager might severely impact our future profits, yet the financial statements won't show it at all." Precisely. Our peers are perfectly debating the severe limitations of the money measurement concept. Examiners generously reward candidates who can step back and identify these underlying assumptions. The fact that financial statements really only tell the financial half of the business's story, while completely ignoring incredibly vital non-financial qualitative factors like staff morale, management expertise, or brand reputation.
Finally, we reach going concern, the assumption that the business will continue to operate indefinitely into the foreseeable future. Okay, this is where I, as your coach, need to step in and pause their debate to highlight something absolutely vital. If a business is a going concern, we value inventory at the lower of cost and net realizable value, and we depreciate our non-current assets over time. Simple enough. But what if the exam throws a curveball? What if it presents an unfamiliar scenario where the business is facing imminent bankruptcy? Listen to me. Top candidates must justify their decisions with hard evidence here. If that going concern assumption is broken, you must immediately abandon historic cost. You have to value everything at its immediate breakup value. You see, this is exactly how you transfer conceptual understanding to unfamiliar, high-pressure contexts.
Section 3, the method mark strategy. Securing marks for your process. But before we get into solving the biggest roadblock students face, let's take a quick pause. If you are serious about unlocking top-tier grades and want to master every single one of these Cambridge breakthrough strategies, you need to subscribe to the channel Ace the Exam's IGCSE O and A levels. That's at Ace the Exam _IGCSE. Go ahead and hit that subscribe button and make sure you enable all notifications right now so you never miss our weekly exam hacks. Okay, let's get back to the session.
So remember Alex and Sam? Well, they've just hit a massive roadblock regarding time. They are actively drafting a model response on screen, but they are rapidly running out of minutes on a massive 15-mark calculation question. Sam is literally panicking right now about getting the final balance sheet to balance. This is exactly where the method mark strategy saves your grade. You have to remember that examiners award marks for the process itself, not just the final number. Here is the strict, uncompromising procedural framework you must deploy when you are stuck. Step 1, deconstruct the question constraints. Step 2, extract relevant data from the stimulus. Step 3, select your analytical framework. Step 4, execute with clear, logical notation. Step 5, verify your results. And Step 6, present with correct terminology. Even if your final calculated number is totally wrong, maybe you made a tiny arithmetic error, executing steps 1 through 4 accurately will secure the vast majority of the method marks available.
And speaking of Step 6, presentation is absolutely not optional. I cannot stress this enough. The syllabus explicitly states that practical application of these concepts develops professional skills. This requires uncompromising adherence to strict presentation conventions. We are talking about proper headings, correct terminology, appropriate formats, and crystal clear annotation. You cannot just write the word money next to a number, you need to write sales revenue or trade receivables. Examiners deduct marks ruthlessly when candidates get sloppy and ignore these professional formatting rules.
Section 4. Pause and Practice Workshop. It's time for some critical analysis.
All right, I'm going to challenge you directly right now. We're doing a visual workshop. I want you to spot the flaws in a poorly written student answer regarding historic cost. Imagine a 60-second visual countdown timer on your screen right now. Ready? The student wrote, "Historic cost is good because it uses the original purchase price. The company bought computers for $10,000, so they put $10,000 on the balance sheet." This is easy to do. Okay, time's up. Did you spot the flaws in that? The crucial point here is how you dissect that mediocre answer. The student entirely missed the evaluative thinking required for top marks. To score highly, you must fundamentally ask, how do assumptions, limitations, and alternative interpretations affect the conclusion? The student stated a basic fact, original purchase price, but totally failed to identify the limitation. The massive limitation here is that tech assets depreciate incredibly rapidly in value due to obsolescence. By blindly applying historic cost without even mentioning depreciation or the prudence concept, the student is vastly overstating the true value of the assets.
Let me use a picture-in-picture feature here to step in and show you the exact cognitive strategy we use to get unstuck. We're going to rewrite that flawed section out loud right now into a full Mark response. We must transform it by actively questioning assumptions, considering different perspectives, and justifying decisions with hard evidence. A flawless answer sounds like this. While the historic cost concept provides objective and verifiable data by recording the computers at their original $10,000 purchase price, its primary limitation in the tech industry is rapid technological obsolescence. If the business rigidly adheres only to historic cost without applying the prudence concept to account for heavy depreciation, it assumes the assets retain their original value, thereby overstating the firm's true financial position and misleading investors. Wow. Do you see the difference there? We defined the term, we provided the limitation, we introduced an alternative perspective, and we justified the final impact on the conclusion. That, my friends, is analytical depth.
Section 5. Top Examiner Traps. Pay very close attention to these examiner alerts.
Let's get serious for a moment because this is the most critical part of our masterclass today. These are specific warnings pulled directly from the principal examiner reports. Listen very carefully to this exact examiner alert. Examiner alert. Candidates consistently confuse key terminology. Always define terms before using them in extended responses. Guys, this is a massive red flag. If you write a beautiful, sweeping 3-paragraph essay on why a company is failing, but you accidentally mix up the definition of the entity concept with the going concern concept, your entire argument collapses. Poof. Gone. Failing to define terms accurately at the start destroys the theoretical architecture of an otherwise excellent answer. Never ever assume the examiner just knows what you mean. You have to prove it to them by defining the term first.
Building on that, the principal examiner reports highlight the top 3 mistakes candidates consistently make. Number 1, using the wrong approach for the wrong context. Number 2, forgetting to check format and presentation. And number 3, providing generic answers that are not specific to the context given in the stimulus material. Back in our digital suite, Sam just had a major breakthrough realizing this exact point. Sam said, "Oh wow, if the question is about a manufacturing firm, I can't just give a generic, memorized textbook answer about going concern. I actually have to link it to their specific factory machinery or their specific inventory levels." Exactly, Sam. Context is absolutely everything.
Okay, let's synthesize everything we have covered in today's masterclass into 3 highly actionable, exam-ready core pillars. First, the 3-step question scan. Whenever you see a prompt, identify the command word, isolate the required core principle, and extract the specific context. Second, the paragraph balance formula. Define the concept, apply it to the scenario, discuss its limitations, and conclude with the tangible impact on the financial statements. Third, the last 5 minutes review checklist. Verify your presentation conventions, double-check your headings, and ensure every single required term is clearly defined. If you internalize these 3 pillars, you are practically bulletproofing your Paper 2 responses against those common examiner traps. We have covered a massive amount of high-level strategy today, from deconstructing command words all the way to navigating those tricky examiner traps. But I'll leave you with this final, provocative thought. Accounting is not just about mindlessly balancing the books, it is the ultimate language of business truth. If you just blindly accept a concept like historic cost without ever questioning its limitations in today's rapidly changing economy, are you really telling the true story of the business? Keep evaluating, keep questioning those underlying assumptions, and you will dominate this paper. Crushing Cambridge exams requires consistent, relentless strategy. So explicitly right now, hit that subscribe button for Ace the Exam's IGCSE O and A levels at acetheexam_IGCSE. Turn on that notification bell for future exam hacks, and tell us in the comments below, what is your target grade for Cambridge Accounting 9706? Put it in writing, go ace that exam, and I'll see you in the next explainer.